Hey everyone, welcome back to Crypto Cash. Thanks again for joining me here. Hope you're having a fantastic day. We're taking a quick look here at Bitcoin. We're going to update some fib levels here and just kind of double check a few key factors. And if you are new to the channel, just know I love teaching people to trade. Hope you can learn something today if you want to become a better trader. Again, cryptocash.tech is a site. Link down below and where you can help you get back on track, so to speak, with trading. So just to quickly preface here, I want to say quick congrats to our community members here, and thank you as well for everybody just kind of banding together and helping out. David, Michael, appreciate you. Same thing with Rexar and Peter. Derry K also very cool to get in there. Love to see that. But just a heads up here, of course, Solana 109% in 19 days. That's our most recent trade that we took here with Solana. That was long, with the take profit target at about 115. So congrats, we pulled a full take profit on that guy. What we want to look at here too as well with Bitcoin is the liquidation data and just kind of understanding, generally speaking, where we're at with heavier concentrations, okay? Because again, these levels don't necessarily have to be swept at all times, but they commonly do. So what I'm getting at here is we have a heavy concentration at about 52,000. I'm rounding up a little bit, 51.7 is that next level there. So that could imply that's somewhat of a resistance zone. And again, don't get it mistaken. Resistances are not liquidation levels, but sometimes liquidation levels can accumulate at support and resistance ranges, okay? And as I talked about previously, 51 to 52K is a sensible area of retracement or where the price action is more likely to pull back based on some previous month closures. Either way, when we look at the current price action, we can see 46,400 is that next heavy accumulation of liquidation. And I've kind of mentioned previously that 45 to 45,500 is an interest zone for me. That's where I feel like we could get a pivot and a bounce if the price pulls back to that level. Emphasis on the word if, but right now we are seeing some bearish divergences, and we'll talk about that here today. So let's go ahead and jump into the daily chart and kind of work our way down. Just kind of see what's going on. In fact, we could even start with the weekly, kind of just get perspective, because I just want to touch on some of these levels here. Again, a lot of these are weekly and monthly candlestick closures, okay? So we want to be mindful of those, and just to kind of throw it out there what those levels are, just so you understand, is right around 47,000 even and 45,500. It's pretty close approximate for those previous levels. Okay, and then again, we also have resistance at 51 and or 52,000 based on previous weekly and monthly closures. Now you probably ask yourself, why is that important? That happened years ago. Well, surprisingly enough, those levels will continue to hold until they don't, and a lot of times you can treat them as resistance and support levels. It's just a common reoccurrence in trading. Taking a look here, we can see a stochastic swing to the upside, of course. That's going to happen. We have such a strong bullish candle here, a very strong week we had roughly last week. Okay. But if we take a look at some larger stuff here, we can kind of see that traditional RSI is starting to plateau. Money flow index is coming down a little bit, and generally speaking, that could be a sign of reversal. We can also see here as well that the MACD is still converging. It's going to do that for the most part on the weekly until we have a significant divergence. So this is a very large lagging indicator, and you got to recognize that just because we're looking bullish here doesn't mean it can't pull back. Okay, it just implies that the likelihood of a strong pullback or a massive pullback below 40,000 is becoming less likely. I personally think that 40,000 or less is not going to be something that we see here. A lot of speculation, a lot of the quote-unquote bears, because again, some people attach themselves to a certain bias while trading. I mean, we have some people in our group that they've been calling a short since 43,000, right? So again, try not to attach yourself to that bias, and don't be the person that says, I told you so, because today, honestly, yeah, it's pulling back. That makes sense, of course, but nobody really needs to hear that. All I'm getting at is the simple fact that can be fairly toxic, and the big picture here is that in this situation, sub 40K seems a lot less likely as our moving averages start to kind of average out at that price point, and we spend more time in this upper range. We now have a significant amount of volume at the 43,000 range. Okay, we'll talk about that. It's going to be a lot easier to see on smaller time frames, but generally speaking, I just want to kind of throw some of those little tidbits out there for the most part. Okay, so I guess the moral of the story is that try not to attach yourself to a certain bias. It can really destroy your account if you're not careful. You got to kind of take each passing day as a new day, right? You got to know that today is a lot different than yesterday. In fact, right now is a lot different than 15 minutes from now. So it's just one of those things. You just got to kind of continue to adjust and be adaptive as a trader. I guess that's kind of the common theme there. So let's look here. MACD, or sorry, stochastic RSI is swinging down. That's kind of letting us know the shift in momentum is occurring. We did plateau and hit that 100 mark. Usually also a sign of reversal. We can see a traditional RSI and money flow index coming down close to 70. They haven't bounced yet or pivoted. We could very well see that, keep in mind. Because again, a lot of times when you're above 70 in the RSI, the price action can stay above that level for some time. Okay? And there is common times when the price action actually bounces and continues. So just keep in mind, with us being above that level, that's not an overextended situation. Well, technically it is, but it's not like the price has to pull back because of it. There's a lot of other things that happen, such as CPI data, for example. Just to kind of throw it out there, when we look at CPI data here, it was expected to be 2.9%. It came in at 3.1%. The price immediately dropped after that. So this is what is referred to as a fundamental catalyst. Okay, so keep in mind this corrective behavior here isn't necessarily a technical analysis blunder, so to speak, because yesterday everything was looking completely bullish. There's no reason to short into this coin. However, with the Bart Simpson, I'm sorry I laugh at this. You're probably like, what the hell is he talking about? There's a joke, and I think it's actually fairly accurate, that this Bart Simpson playout chart essentially does happen sometimes, where the price gets all spiky at a higher resistance level, and then it inevitably drops. Okay? And that's just how it goes in crypto. You rarely see this in traditional trading, by the way. Cryptocurrency is just straight up and straight down sometimes. Okay, so anyways, we had the Bart Simpson playout chart here today, and that's essentially coming to fruition. Is the price going to just drop continuously down from here? Not necessarily. We're going to look and see if there's anything better on smaller time frames, but the bullish time frame here is the daily. The daily looks pretty damn good. Okay. Now, we haven't broken below 70 in the RSI yet, so I don't think the sky is falling. But if we do lose 70, there's a good chance we could see the price continue down lower to 50, which just implies we'll probably see some sideways and down action here moving forward. Once again, previous resistance zone is about 47,000. That's previous week close and a most recent daily candlestick closure where we had some trouble getting past that level. So we can presume the price will have some kind of support in that range. 47, once again, down to this 46K mark. There's a good chance we could see that the price action range bound within 45 to 47K. All right, so again, just kind of throw some things out there. Those are some key level supports and resistance to pay attention to. Now, taking a look here at the chart, we can see obviously pretty strong divergence, of course. This is no surprise when the price drops as well as it did instantly as soon as the fundamental catalyst occurred. We're now testing the 20-day SMA. Strong likelihood we break below that, and if it does, then we can confirm that this bullish uptrend has discontinued. Now, when I say discontinued and the bullish uptrend, I'm referring to short term, all right? And don't get in your head that the price action for Bitcoin cannot continue to go higher. It very well can. In fact, it's proven to go much higher than a lot of people expected. But the truth is, we're not like hitting this massive resistance zone here at 50,000. It's more of like a mental block type of situation where 50,000 just seems like a big number, and a lot of people consider that that to be a monumental number, and they'll consider shorting. It's kind of like a psychological effect. Okay? We talked about this briefly on our chat yesterday, and it's one of those things that's you just kind of got to be mindful of round numbers. They have a tendency of being very consistent in weird ways. Conversation for another day. It's more like a theory type of talk there, but generally speaking, we can see that happening at roughly 50,000. Taking a look at the MACD, the stochastic RSI, we're seeing a second swing to the downside that carries a little bit more weight. We can also see here that traditional RSI and money flow index all kind of hanging out there closer to 50. So again, the sky isn't falling, but if we lose that 50 mark on the 4-hour time frame, then we might want to consider shifting gears and mindset to that of considering a short position. All right. I know you're probably thinking to yourself, why didn't we short at the top? Well, because you don't know where the top is. Most people thought 43,000 was the top, 44, 47,000, 48.5, and now 50,000. There's been like multiple tops, right? So in everyone's defense, no one truly knows, okay? But the truth here is that we do see some bearish divergences. We got a MACD divergence, and the 4-hour time frame does look more so bearish, right? But we haven't lost any key levels yet, in my opinion, so I'm not super concerned with the price action continuing lower. I just have a lot of limit orders set on the way down. See, I love doing this here. When the price goes up, I continue to set limit orders as the price goes up. And as it goes down, I continuously get filled for a nice average position. I personally love doing that myself. Some people don't like that. They like to wait to buy in at one big point. Like some people are still waiting to buy in at, 38,000, right? Well, the truth is that may never happen again. So why not get in realistically early and average your position down, set larger amounts as the price goes down closer to your target. Okay, that way if the price doesn't hit your target, you're still in the game. Okay, again, different strategies. It's not to say my way is the right way. It's just worked well for me over the years. So the hourly time frame here is let's see. Let's double check this. We are breaking bearish, but we haven't fully yet. So truth is, lag and spend is free and clear of the price action, so that's a bearish sign. Conversion line is now below the baseline. That's slightly bearish, and we are peaking below the cloud here. Okay, so the truth is, if the price goes like this here and kind of worked itself out to about 48, so just say the price action closes at 49,000 here today, that would be a solid consideration for a short position because we'd have a lot of confirming factors at that point. Okay. We're going to double check and reiterate and reaffirm this here first and make sure it's worth taking a short. If you do end up taking a short at 49K, for example, make sure you have some realistic profit targets between now and 45K. Because me personally, I don't really think we're going to break below 45,000 or 45.5 based on weekly candlestick closures. There's a lot of reasons why the 45 to 47K range is likely sustainable. Okay. Once again, that's just my personal thoughts. Do not just take what I say here as the exact 100% guarantee it's going to happen. Okay, trust me, folks. I don't have a crystal ball. Neither do you. Nobody does really. But we can look at the the proof, and so far right now we're seeing some bearish divergences in the 4-hour as well as the 1 hour. Okay, now people that use the 2 and the 3-hour time frames, you're going to see that as well because anything on the 1 hour translates into those larger time frames, and the 4 hours already picking those up. So the truth here is that there's not really a lot to say as far as the price just bouncing and recovering from here. So just be mindful of that. If you did take some of those long positions that we considered yesterday, and we took, what was it? I think Dogecoin, ICP, and Reef, those coins are still doing just fine. I mean, I'll double check them, of course, here today and make sure, but they're designed to be able to sustain these type of fluctuations. Okay, so that's where you got to keep in mind. And yeah, it is funny how sometimes the first take profit target instantly gets filled and it goes red. But you know what? 50% of trading goes in the direction you want it to. Okay, so either way you look at it, it's all good. I wouldn't concern yourself here. I don't think we're going to see 40,000 immediately soon. There's potential. There's definitely potential for that. Okay, but you got to understand this is a fundamental catalyst that pushed the price action down. Nothing more. I mean, as soon as the CPI data was released, the price dropped. What was it? Somewhere in the range of about 3.5%. Okay, so again, fundamental catalysts happen all the time, folks. Do not be overly concerned right now. Let's give it some time, kind of see where it averages itself out, and kind of go from there. I'll see if I can reanalyze Bitcoin later today before the day, right when the candlestick closes, so we can kind of get a better perspective of where we're at. Because again, a full 24-hour candle is a much better understanding of the overall situation versus just a 15-minute candle that changes every 15 minutes, right? So either way, that's kind of where we're at there. Last thing, of course, if you haven't already, join Bitunix, phenomenal exchange, link down below. No KYC or VPN required. Check them out. Phenomenal. Thank you again so much for watching. Hope you all have a great rest of the day. We'll see you in the next one. Take care.